Hey guys, welcome back to our podcast. Chris and I are here to just talk about a few things that are important right now.
Yes. But we're going to talk about what credit.
Yeah.
The different types of loans.
Right. So we're going to compare FHA and conventional just to give you pros and cons of each and the importance, obviously, of credit.
Right.
So this is where people say, well, if my credit's a certain amount, why is my rate there? And so FICO is really important when it comes to rates.
Yeah, I agree 100%. Yep.
Yeah. So first, let's talk about credit a little bit. So the minimum FICO score that you need with the minimum down, let's say 3.5% down, is 580. So that's not bad if you think about it, but it just means that you're really terrible at taking care of your credit.
Right. You need some help. You need some guidance. Yeah. But it's okay. It happens to everyone.
Right?
Yeah.
So 580 is not bad.
Yeah.
Down payment assistance for the most part. There's some programs available at 600, but if you don't want to get stuck with a high interest rate, you need at least a 640.
Okay.
So
640. Okay.
So we're talking about the minimum going FHA, and this is where we compare FHA and conventional. So with conventional, there are programs with 3% down, but the rates are really high if your credit's really low. So that's why sometimes we push people to FHA, because if you have a 640 or higher, your rate's not that much better than somebody that has a 780 FICO score. It's almost about the same.
That's good to know.
Yeah, but in conventional, it's complete opposite. If your credit's a 640, man, it's like at least 1% higher than if somebody has a 780 FICO score.
Oh, wow.
Yeah.
I didn't know that, man.
Yeah, so
that's really good to know.
So imagine somebody that has a 640 FICO score trying to buy conventional. It doesn't make sense. So this is why we say FHA is better in that circumstance.
Right. And then also, too, like I was asking you earlier, everyone always asks, I thought conventional was better than FHA, but it seems like at some point
it depends.
It was, right?
Yeah, so rates weren't that skewed. The rates, the difference in rates right now with conventional and FHA are almost 1%.
Yeah.
So FHA rates are lower right now, and also the PMI dropped on FHA. So that was one of the other things that people didn't like FHA, because no matter how much down you put on FHA, you still have PMI. Right, it's almost in half. So before it was like 0.85, 0.75. Now it's like at 0.5%, 0.55%. So it's a big deal in the payment.
That's good.
Yeah.
Yeah.
And then so the only thing that I would suggest conventional for right now is if you're putting a huge down payment, because with FHA, even if you put 50% down, you still have PMI.
Oh, wow. Okay, that's good to know.
Yeah.
I didn't know that, man.
Yeah, imagine.
I learn something new every day.
For 10 years. So you have PMI. So if you put in a big down and your credit's pretty good, then more than likely we're going to push somebody towards a conventional, because you won't have that upfront PMI, you won't have the monthly PMI, and hopefully the rate's closer to the FHA rate because you put in a big down payment.
Okay. Yeah. Wow. That's good.
So, I mean, that's the way you look at it, right? The better your credit score, the bigger the down, conventional.
Right. Okay, that's good to know. And then you could also, can you also buy the rate down permanently?
Yeah. So there's a chart, and this is the thing, is you can get pretty much any rate you want. So somebody tells me, hey, how about a 5% interest rate? Well, it's there, but they charge what's called points.
Right.
And 1 point is 1% of the loan amount.
Okay.
So for example, give you an example. So let's say rates right now at 6.875, 1 point. So the loan amount is $300,000, so it's $3,000 in points that you're for that rate.
Okay.
And then you say, Edgar, can you give me a 6.25? Sure. Now it's 3 points.
Okay.
So it's 3%. So now it's $9,000 in extra fees to get down to 6.25.
And we're seeing some people actually buy the rate down.
Yeah. I mean, if you know, I guess if it makes sense.
Yeah.
If the seller's paying for it, why not?
Oh, yeah. If we're able to get those concessions, definitely.
But me personally, if I'm only saving $200 a month and I have to pay another $6,000, it doesn't make sense, because you're not going to recoup that money for years.
Yeah, you're right.
Like at least 3-4 years.
Would you say it's better to wait and then see where the rates are going to go?
I think so. I mean,
refinance?
We can also do, if you're getting a set of credit, do a buy down, a temporary buy down, a 2-year temporary buy down, or a 1-year buy down.
Okay.
Where the rate drops by 2% the first year and then 1% the second.
That's good.
And in that way, you're at least using the money to drop it substantially. And then whatever money you don't use from that amount that you got from the seller, you can always credit it back when you refinance.
Wow. Okay, that's
so
really good.
I would suggest there's a way that we can do side-by-side comparison, which will show you whether or not it makes sense to buy down the rate or not. So
get creative.
Yeah, tools. So just main thing, make sure that you have somebody like us qualify you and check your credit. We can do a soft check where it doesn't hurt your credit, Because all those websites like Credit Karma and all that stuff, they're way off on the FICO score. So
Right. Yeah, that's one of the things we were talking about earlier. Yeah, they're not very accurate.
So to
Yeah.
get accurate information, reach out to us. We're here to help you guys.
Yep.
We're here to help you on your home purchases, refinances, and
Anything
selling
involved
it,
with
anything
real estate.
in real estate.
Yeah.
Like it doesn't matter.
Yeah.
Sell your cardboard box from downtown LA. See you guys.
There you guys.